Hello, everybody. Earlier today, we did a live stream on Fibonacci retracement and how to use that tool. I'd like to do just a brief recap of that to try to consolidate a lot of that knowledge. And the reason being is because I really want you guys to benefit from this. And I think that an hour-long stream is a little bit difficult to watch when it's sort of live and going back and forth and things like that. So here's what we're going to start with. Your Fibonacci retracement tool, you go over here, click Fib retracement, and you're going to activate your magnet tool, which I like to use. You don't have to. And you would simply draw from, left to right, and you would choose a swing low. I'm choosing this one just because that's where the impulse started. So when you draw from a swing low to a swing high, like we did here, this gives you areas of potential support. So on a move down, the 382 could be support, the 0.5, the 618, the 786, or the 886. Okay? And I like to use these to really gauge the strength of a move. So we have this move up, right? If we're going to see continuation, we probably want to see it bounce at the 382. Okay, if we don't see it bounce there, maybe the 0.5 or the 886. Now, if we start to extend down to the 786 or the 886, at that point, it's harder to think that, yeah, we're going to see a massive continuation to the upside, right? We would prefer to see some of these higher levels here, a bounce from the 382 that would give us a bull flag, right? Or the 618 being sort of the golden zone, right? The zone that we really oftentimes look to for a bounce. And if that's lost, then not to say that we couldn't bounce here and have continuation, but it's a little bit weaker of a move, right? We would expect buying power to sort of hop in here. Okay, now if we were to instead draw our Fibonacci from the range high, again, left to right, to the range low, this would give us areas of resistance on a move up, where we would look for price to reject from here, the 0.5, the 618, the 786, or the 886. And in this case, we could see that price actually rejected from the 886, right? And we could see that if we go ahead and I'll just get rid of some of this here, we could see that the 618 acted as resistance for a time, the 786 acted as resistance for a time, and then the 886 is ultimately where we, saw our rejection from. Okay. And here, when we hit the 886, back test the 0.5, and you can just see how well respected that these levels are, right? So I don't really want to talk about like where Fibonacci came from or what it is exactly, but just understand that these are levels that are important and very well respected that every trader is likely keeping an eye on, okay? And the most important part of this is that Fibonacci is not to be used alone. It's added confluence to your other technical analysis. So daily, weekly, monthly levels, naked point of controls, using volume levels, etc., trend lines, channels, whatever it is that you like to use as your added confluence. Fibonacci is just an addition to that, right? It's not meant to be used on its own. Okay, so we have that, talked about support, and now using it, how to draw it as resistance. And we will go on and we're going to talk about the 382, which is flags, right? So we would draw from our swing low to our swing high. For a bull flag, you would want to see it retrace to the 382. If price falls below the 382, it is no longer classed as a flag. Okay? Typically, as added bonus, you would want to see a falling wedge, which we know is a bullish pattern, and then a bounce from there, right? Taking out this high. Now, another form would be sideways range, which again, so as long as it comes down, tests the 382 and has sort of a sideways range here, that would be another great example of a bull flag that we would then want to see a breakout, back test, and then continuation to the upside. Now, if we were to see this move here, and I have it drawn a little bit poorly, but let's move this up here, right? Let's say that we broke out and we drew the 382, but price, price doesn't come down to backtest the 382. Instead, it kind of comes down a little bit and it slowly just consolidates to the upside. And what does that give us? It gives us a rising wedge, okay, which is a bearish formation. This is not a bull flag, okay? It is certainly not anything that you would want to long in this case. Could we break out to the upside? Sure, and we've seen examples of that actually recently. Let's go ahead and just take a brief look. We've seen examples of that even recently. You know, for example, like here we had that sort of, you know, upwards consolidation. Here we had that upwards consolidation here. But again, what happened? We came down and swept the lows before we then had continuation to the upside. And so that's exactly what you would want to look for, right? So the other thing I want to cover, and actually let's look at a real world example of a bear flag. So we'll go ahead and draw from our swing high to our swing low, left to right. And we can see here that we have our pull and then our flag. And this is a really good one too. We could see that price even back tested the flag after the breakout for then continuation to the downside, right? And this is also known as a dead cat bounce. Okay, so if we have a move that comes down like this, right? A move that comes down and we get a bounce on it and we don't break the 382, well, that's not a good sign that price is going to have continuation to the upside. In fact, of course, here it would be a sign, given that we have a bear flag, that we would have continuation to the downside, or at the very least, simply to revisit the lows again, right? So a dead cat bounce, again, is just, it's a way to use the 382 as a way to gauge, you know, whether or not, is this the start of a bull run? Or is this instead, you know, a dead cat bounce? And you can see that, you know, by, let's say if we go here down to our swing low here. So we have, you know, the 382 of this entire move down as at about 36,000. If we were to see a bounce here and we're getting up here and people are super bullish, right? They're super bullish up here because we pumped from, you know, 15,000 up to 36,000. People are super, super bullish, and we continue to reject from here and then come back down, and people are wondering, well, why didn't we continue up? Why wasn't, I thought this was a bull run. We had this massive pump to the upside. Well, in fact, it was actually a dead cat bounce, right? We had this move down, and it was a dead cat bounce because we couldn't take out the 382, right? So that would signal, no, it's not a bull run. This is actually a dead cat bounce. This is the time to short, or at the very least to take some profits, right? And you know, look back to the downside to maybe put in then a range. Now, if price were to break up above here and have continuation, then great. It's not a dead cat bounce. Now we can simply look at higher levels. Okay, this rally has more legs than previously expected, right? Okay, you know, from here now we will briefly look at the 0.5, and the 0.5 is, you know, it's really good for channels because it gives you the mid range, right? You can know that where is the halfway point of this move. Well, if we just draw our Fibonacci from here to here, and we can go ahead and add the 0.5, we can know that 20,300 is halfway between here and here. Now, me personally, I like to use the 0.5 for channels and profit taking. Okay, we'll take a brief look at that. If we go ahead and go down to the 30-minute time frame, we know that we've had this channel here that we've been trading for some time. Okay, so we've been trading this channel for some time. Well, if we go ahead and we draw our Fibonacci tool from the top to bottom, we can see that the midline is, well, it's the 0.5 Fibonacci, right? So what we do is we short the top, take profit at the midline, take profit at the bottom, long the bottom, take profit at the midline, take profit at the top, and rinse and repeat, right? And this has worked really well for us several times, right? You know, long here, profit, long here, profit, profit, short here, profit, profit, long, profit, profit, you know, and so on and so forth, right? And another way that I like to use the 0.5 is also as a take profit on wedges, as a primary take profit on wedges, and then also used to identify a cup and handle. And we'll briefly start with the cup and handle here. We had an example from earlier So if we go ahead and we'll just hide this here, we'll get rid of this retracement tool, and let's say that we have our oh, I don't have it on there anymore, no worries. So we have, you know, the top of our cup here. We could say that this is our cup and we're looking to put in a handle. Now, obviously here, price has since fallen quite a bit, but in the example from earlier, basically you draw from the low of the cup to the high, okay? So it's the depth of the cup, and you want to see the handle go to halfway of the depth of the cup. So what we would be looking for here, let's just go ahead and flip this here. We'll go like this. I'm going to draw a horizontal line here and about here, okay? What we would be looking for then is a retracement down to the 0.5 to find support, price to break out, back test, and then have continuation. Now, this is why the 0.5 is so important, because here we can see price fell through the 0.5. Okay, and I know it's fallen pretty far, but here you could say, well, it fell a little bit. This could still be classed as a handle. No, it couldn't. Okay, the 0.5 is the cutoff line, and once that's lost, we can no longer class this as a cup and handle. We would have to move on to a new form of technical analysis. Okay, so again, just like how the 382 helps identify with bull flags, the 0.5 can help identify cup and handle. Okay, and I also, like I said, I like to use it for take profit on FTM, or I'm sorry, on wedges. I just saw FTM, so that's what I had said. So we'll go ahead and delete these, and I'll delete this. So we have a wedge here. Go ahead and draw our Fibonacci retracement tool from the low to the high. And we can see here that so the 0.5, this would be halfway from the high and the low of the wedge. Okay, so now for me, this is a great take profit zone. Now let's go ahead and add the 618. That could be our next take profit zone. And we could see that the 618 held a support, lost, and then reclaimed with a massive move up. And on that move up, you would probably want to set your stop loss at break even, or go ahead and cut that short on that strength, right? Now here's what else is cool. So we have this wedge that has bearish divergence on the RSI, right? We're at the apex of the wedge, so this is a nice short. We saw it re-enter the wedge, and upon re-entering the wedge, we'd probably look for our short opportunity with our stop loss above here. Now, here's another short opportunity, or at least to compound. If we go ahead and draw from this swing high to this swing low, and we go ahead and put on our 382, what did we just talk about? Flags, right? We can see here we have that consolidation towards the flag like we were talking about. So this was a nice bear flag, right? So this gave us another short opportunity to compound here and then to look lower. And then look, what else happened? Let's go ahead and draw another one from the swing high here to the swing low. What did we get? Another bear flag. One bear flag leading into another one that then, fell off, found support, and then had its move up. Right? So again, using Fibonacci, it gives us an idea of what we're looking at here. Okay, so if I draw this and I see a bounce here and it's slowly coming up and I'm seeing, gosh, it's not taking out the 382, plus this is a rising wedge off of bearish divergence, I'm going to short this, right? It can't take out the 382. That's a sign of weakness. I'm going to short it and look lower. Okay, then we get this move down and it bounces and we say, all right, should we close our short? Should I be worried here that we're going to have continuation to the upside? Well, you use Fibonacci. You do your drawing from here to here. And we look and say, well, it's not taking out the 382. In fact, this is another bear flag. I'm going to look lower. And then we hit our main target, our 0.5, and of course, then the 618. Okay. Next, we will talk about the 618 very briefly, and we're going to do so again using my website. Go over to Memoir, where I keep a record of some of my past trades, and I'll just show you one example of this to save time. So the 618 and the 666, it's a nice little golden zone, okay? And it's typically where I would expect price to bounce if it's going to bounce at all. If we lose the 382, we lose the 0.5, I'm looking at the 618 and I'm going to say, if we bounce here, great. If we lose it, we're probably going to go lower. Okay. And that's not the case every time, but it is sort of like that line in the sand for me that I like to keep an eye on. So here is the setup, right? You get a move down. People here, we get this bounce, and a lot of people might say, oh, I missed out on the trade. We're probably going to be looking higher. Well, no, that's not the case at all. And oftentimes in the Discord, I'll say, hey, look, these are the early longers. What happens? Boom, they get wrecked here. And then as an added bonus, we had this failed auction and trapped shorts here. But at what point in time do we look for an actual bounce? Well, look at this. It's when we have 1, 2, 3, 4, 5 candles, green candles off of increasing volume off of the low. You know, people, again, we would get up here and some might say, oh man, I missed a long, I got a long here. Well, no. Draw your Fibonacci retracements from the swing low to the swing high. We get our 618 and we're patient. We wait for price to come back down, test the 618. If it holds a support, we open our long in this zone, our stop loss below here, we look for market structure change, and we trade it higher. Okay, nice and easy, right? That's how you can use the 618. And here's another great example too. We have one more here. Again, this was on increasing volume. We had 1, 2, 3 massive candles up, right? So here we got this move down. We had this wick. People might look to long here and they have FOMO that they don't want to miss out. Well, what happens? Those early longers get wrecked here. We have this massive move up, and on this massive move up, that's when a light bulb should go off and say, this is where I'm going to draw from here to here. Look at the 618, see the back test, hold the support once and twice. We open up our long positions here, our stop loss below here. We have market structure change, and we look to trade it higher, right? All right, so we will go back to our charts, and the last thing I'm going to talk about is, again, channel trading with the Fibonacci retracement tool. And I think you guys are really going to like this. It's sort of an added bonus. We've been talking a lot about channel trading because we've been stuck in this channel for quite some time, and we've gotten a lot of really good trades off of it. And what we've seen is a lot of people have been really looking for a breakout, you know, like they're longing here and they're getting this breakout, and then price revisits and they get nervous and they'll hold anyway, and then price breaks out and they're not taking profit, but it comes back again, and maybe by the time it comes back down here, they close their long from here, and then they see it move up again and they're thinking, oh my god, I missed the move. Then they long here, and you can see that channel trading, it can really mess a lot of people up being in a range. Okay, mentally. If you're longing here and you're looking for price to go much, much, much higher, well, seeing your entry revisited 1, 2, 3, 4 different times is, you know, it's going to be a little bit concerning. Or if you short here and you're looking for a breakdown and you see your entry revisited once, twice, again, right? That's going to cause you to lose faith in your trade. Now, on the other hand, if you're trading a channel, you can simply long the bottom and short the top and be very happy, like we've talked about. Now, here's an added little bonus, okay? Instead of just drawing this simple channel here, because look, we've had deviations, deviation, 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 and oftentimes people can get caught up in the deviation of a channel and think, wow, this is the breakout here, okay? So I'm going to go ahead and we're going to draw a Fibonacci from the bottom to the top of the channel, and I have it pre-drawn here, and it would look something like this. And you can go ahead and copy these levels, right? Make this on your own. We have the, I'll go ahead and just pull it up here for one brief moment. You can see these are all the levels that we have set. All right. And we're going to hide the channel. And look, this is what's so great about it is we can say, people here, they might think, oh, it's a deviation. We can say, oh, well, it's within the bounds. If we get in here, I'm going to long. If we get in here, I'm going to long. I'm going to put my stop loss below the low of my bounds in my range, and I'm going to continue to do that. And you can see that, you know, how many times this would have been a really great trade, right? Now again, we can do the same for the top, and I know that there's been some extensions from the top, and in this case I'm actually going to switch gears. We're going to get rid of this, and we're going to draw an upwards channel. So again, on the upwards channel, which we shorted here twice, which is awesome, right? Again, it's the same concept. Now, what we can do here, there's another tool. not Fibonacci retracement, but Fibonacci channel. Okay, and you would draw this the exact same way that you would draw, you know, this channel here. You would put on your magnet tool and you would take the high and draw the trend line over where you want it to be, right? And then you would draw to the low. Same way you would draw the channel normally. Now here, again, I already have it drawn here, so I'm just gonna get rid of this and hide the upwards channel. And now again, look what this does for us. This gives us bounds to say, look, I'm gonna short here. If it gets within this zone, I'm willing to short, and I'm gonna put my stop loss outside the zone. If we get into this zone, I'm willing to long, and I'm going to put my stop loss outside the zone, you know, using market structure, of course, in the case that this is an upwards channel. And you can see just how well this worked every single time, and taking your profit at the midline, which is also what? The 0.5. All right. Now, in this case here, we can see that price is really starting to lose this channel, and we're outside of our bounds. We're not interested in longing this, at least not with respect to this channel. Right, we can see that there's been a loss of momentum in this upward channel, and in this case, with respect to this channel, we're not interested in longing this, right? And in fact, we're actually in some shorts. All right. So another great example I want to show you guys is LTC. This has been super, super, super cool. So I already have this one drawn out, but you can get the idea, right? So we'll, where is that channel here? So you can see, like, we had this channel, we've been in it for a very long time. And oftentimes people get tripped up and say, oh, this is a deviation, we're going to break out and I should be longing, or here, this is the breakdown, or this is the breakdown, or this is the breakdown, right? Well, in this case, we can draw instead the fib channel. And what this does, again, it gives us sort of this zone of deviation that we're still willing to trade the range on. And you can see it here, you know, here, great. Look at all these good trade opportunities that came from the deviation of that range that we could have looked to have traded, but others may have thought, oh, we're breaking out. So again, this tool is very, very useful. It's essentially a Fibonacci retracement, but allows you to draw diagonally instead of just horizontally. All right. So let's get back to our BTC chart. Go ahead and hide all of this. So again, I'm going to let's go ahead, and I just want to draw one more fib retracement. I just want to talk about this a little bit. So we have our levels here, and also the 886. Now, again, I just want to do a little bit of a recap. The 382, it can give us our dead cat bounces, right, or our flags. If we're really bullish on a move, like we had this nice thrust to the upside, honestly, we want to see it. If it does retrace to the 382, we'd like to see it bounce there, right? Because that's bullish. People are eager to buy. They're not waiting for lower prices, okay? The 0.5, like we talked about, it's great for channel trading. It's good for identifying certain patterns, like the cup and handle. And it's also a good place for take profit on wedges as well. Honestly, using the Fibonacci retracement tool at these levels, it's oftentimes really good to use as take profit levels. And we could do a little recap on that briefly before we close this out. And then lastly here, the 618, this is the golden zone, right? This is the place that I most look to. And I also like to tack on the 6.6 there, so it does give me kind of this zone, right? And here's where I look to. If we get this move down, this is sort of my last hope for a bounce. This is where I really want to see people step in as support here. Of course, with added confluence, but to me, this is just such a key level. And we talked about that on finding bottoms and tops, right? If you put in a low and you backtest the 618, great. You can enter here with your stop loss below the low, and it'll give you a good position like we had talked about. Now, going down to the 786 and the 886, there are some technical analysis that goes along with this. So like if you're looking at, say, Elliott wave 2, you have your wave 1, 2, you would want to see retrace somewhere between in this zone. So you can sort of keep that in mind, right? You can look for a move down, you know, sort of a bounce. Let's flip the color here. Sort of a bounce, reclaim the 618 off of a bounce here, reclaim, and then look for continuation to the upside, right? And in addition, you know, the 786 and the 886 are very key when it comes to harmonic patterns. And this is something I'm not going to get into yet because it's very, very advanced. It's very technical stuff. However, the point I want to get at here is if you see a move down and you want it to be bullish, you don't want to look for a retracement all the way down to the 886, right? You're not going to want to see something like that. You're going to want to see buying power step in earlier at the 382 or the 0.5, and especially at the 886, and maybe even at the 786 on a reclaim of the 618, right? But getting down here, you're not really going to look for continuation to the upside. Now, again, with harmonics, there are those scenarios, okay? But that's a little bit more advanced, and for at least just for this video, this is what I'd like you guys to focus on. So we'll go ahead and cut it off there. Again, keep in mind these Fibonacci levels are used as confluence to other analysis that you do. Okay, that's very, very, very key to keep in mind. All right. So we'll close it out from there. I hope you guys enjoyed. This is Fibonacci retracement tutorial. It'll be leading into more Fibonacci tutorials that will eventually lead into more advanced technical analysis. Have a good rest of your day, guys. Thank you for watching.